Welcome to SmithWeekly discussions, an occasional program for our readers and listeners of SmithWeekly Research. Please note this program is a private discussion, and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion today, we want to say thanks for questions coming from our audience at SmithWeekly, including at Cure for Low Prices, Jared W., Dale H., Luke A., and Dave V. We are talking today with Travis McPherson, Vice President of Corporate Development at Nexgen Energy, an Athabasca Basin, Canada-focused uranium developer advancing the Arrow project. The company is listed on the New York Stock Exchange under the symbol NXE and on the Toronto Stock Exchange under the symbol NXE. Travis, welcome to the show.
Yeah, thanks, Andrew. Really appreciate it.
You bet. So Travis, let's go into your background before we get into other stuff. We typically start that off with background. Tell us your background in the natural resource business, and then tell us how you came to end up at Nexgen.
Yeah, so I graduated from university here in BC at the University of British Columbia in their business program, and then immediately went into investment banking and worked in there for a number of years, focused entirely on the natural resources and mining sector specifically. From there, got headhunted and went to a gold producing company that was listed in Toronto, helped out on some M&A as well as some capital restructuring mandates, and then got to know the guys at Nexgen, specifically Lee Currier, the founder and CEO, pretty early on, like when the company was first founded, or first went public anyways, in 2013, and then joined them in early 2014, right around the time of discovery, and have been with them ever since. And I'm in charge of kind of the corporate development, which is a pretty broad bucket, but it incorporates things like investor relations, obviously M&A related activities and processes, and then work very closely with Lee on and the board on strategy and really optimizing what we have here at Nexgen.
Okay. Well, give us a snapshot of the management expertise there, the capital structure of the company, maybe some key insider ownership that you'd like to mention, and how at these levels that management is aligning themselves with shareholders.
Sure. So, it might be worthwhile kind of, determining or going back into the history of Nexgen and how it was kind of founded, because it speaks to both the experience of the management and board and kind of their vision. So it was founded in the 12 months following Fukushima, which I think should speak directly to the fact that the founders or management and the board, are true contrarians and basically did the research, determine both from the macro as well as the micro, had the opportunity. Lee specifically worked at First Reserve International, which is large private equity fund based in Connecticut, but he worked in their London office with someone who's on our advisory board named Charles Scorer as well, who's a seasoned uranium trader and marketer. And they basically looked at every asset around the world from a technical, financial, and sovereign risk perspective. And in that review, looked at over 200 projects in the Athabasca Basin, because obviously if you're looking for exploration, you want to be looking for elephants to take on exploration risk. It's not really worthwhile looking for small deposits. So the only place in the world that you can find that in uranium is in the Athabasca Basin. And so focused there, and basically came up with the southwestern part of the basin and looking at assets over there, because the eastern part of the basin is the historic producing area of the basin. There's 3 mills operating over there. Well, I guess right now there's only 1 mill operating, but at the time there was 3 mills operating, 3 mines operating. Obviously today we have 1 mill, 1 mine operating, but in that eastern part of the basin, it's had a very long history of exploration. A lot of drill holes poked in the ground. It also benefited from a lot of outcropping at surface, so it's kind of a low-hanging fruit situation in the east. We decided that, well, because it's a basin, obviously the geological setting is just as prospective in other parts of the basin, and specifically we focused on the southwest because we were able to gain a really large land package of over 260,000 hectares of land there that straddled the basin boundary. And today, you wouldn't be able to put that together. We utilized that period in the 12 months following Fukushima, where the sentiment was at obviously a very low point, to acquire that portfolio package. And really, the thinking there is why wouldn't it be any different than what's on the east? Geology is all the same. The only difference is there's kind of 100 meters of overburden that masks all the riches below. And so using the latest technology in magnetics and geophysics, we acquired the projects and went about exploring and doing our work on them. And again, using newer age technology, you're able to see down more accurately. And then, in the first drill hole of the Arrow target, we hit Arrow in February of 2014, Valentine's Day. And so it was just, we just passed our 5-year anniversary of the discovery. And since then I've drilled kind of in the order of 350 more holes there and I'm on the precipice of releasing a final feasibility study and the final stages of the permitting process.
Okay. Well, I want to ask you a couple things, and then I'll go back to my original question. So give us an idea of the key people that were back at Nexgen at the time, from setup at 2013, 2014, et cetera. Give us kind of the key people that led to that discovery. And then also, can you tell us, what's your thoughts on the eastern side? Do you think that some of these deep hosted deposits, similar to Arrow, do you think that the eastern side has not really seen that kind of poking in the ground?
So, yeah, I mean, the people that were involved at discovery remain involved. Key people wise, we have Richard Patricio, Chris McFadden, Craig Perry, Lee Courier, obviously, who's the founder of it, is still the CEO. In terms of technical, on the ground, it was a gentleman by the name of Andy Brown, who was the vice president of exploration at the time of discovery. And his background was very long with Rio Tinto and all in uranium primarily. And then he stepped off, just kind of entering retirement age, the year following discovery. And so that's kind of the team. So again, most of the team remains in place from that time. Obviously, we've had we've made some additions, subtractions at the board level. Most recently, obviously, Brad Wall, the former premier of the province of Saskatchewan, just joined us last week, which is fantastic. Really good addition. And we've also made a couple other additions with Sybil Veenman, who's a very seasoned corporate director, and Carrie Howlett, who's Saskatchewan-based and also a very seasoned executive. She's on the board of Sask Power and a few other things. So excellent additions there, but key people still involved from the time of discovery to today. So that continuity exists. And then in terms of the east, and your question about the east, in perspective, yeah, I mean, we had a balance of projects in the east, exploration projects there, because of what we had found in the southwest being this monster called Arrow. We knew that those portfolio of projects that we had in the east, we weren't going to be able to get to because there's no synergies at all being in the east to the southwest. It's kind of 700 kilometers away. It's you're basically setting up two distinct camps, organizations, really, in those two places. And so we decided to actually carve those projects out, and raise some money. And so those projects are now in a company called ISO Energy. ISO has since gone on to acquire a few more projects off of Cameco and others, some Japanese partners. in the east, and most recently have just made a discovery at their Hurricane Zone and then Local Rock project, which they acquired off Cameco. So, yeah, I think, and Nexgen, on behalf of the shareholders of Nexgen, still remains a 55% shareholder of ISO Energy. So, yeah, very, very supportive and obviously like the prospectivity in the east. It's just given what we have, the scale, the disruptive nature of what we have in the Southwest, we have to focus all of our technical and financial wherewithal on that project and can't dilute the focus away from that at all.
Right, and I see Craig's spending more time at ISO now with him actually 100% of his focus is on ISO, and Nexgen, of course, is a key shareholder, kind of backing up ISO. I think it's got a good situation from the discovery standpoint. So thanks for the information on that. So on another subject, so some out in the market tend to think that Nexgen is really the only uranium business worth looking at going forward, and that the rest of the junior, exploration group and development side is kind of a waste of time outside of maybe Canada or even Nexgen. What are your thoughts on that thought process?
No, I mean, I wouldn't agree with that at all. I think the reality is, and I think the world will come to learn that a lot of the areas that from a supply side that the world is relying on, both in terms of projects that are in development, late stage exploration, or have been mothballed because of low grades and cost issues. We think that as time goes on, the world will come to the realization that those projects are a lot more difficult to bring online or won't come online, either because of social issues or technical issues. And so we think that there's a real place for a lot of uranium to come to market, because we believe that the supply gap will be significantly worse than what is perhaps forecasted in the media, I guess the uranium media, which is given, again, the opaqueness of the market is something that is difficult to get through. But no, I would say, for us, yeah, Arrow is going to fill a significant part of that gap, but there's definitely room for others, absolutely, including exploration. And as we all know, I mean, exploration takes time, takes a lot of money, takes a lot of luck, and a lot of different things. And so you really do have to invest in exploration, 10 or 15 years, 20 years even before you think that will need to come to market. And that's why, you need to be focusing on that today. Because if you look out, the build out that China's doing, the build out that India's doing, the resurgence of Japanese reactors coming back online, the US's new commitment to nuclear, it's really coming around again and having a resurgence. And so we think that supply demand picture will be vastly different going into next decade and onwards, and really just compounding thereafter.
Right, and the stars are certainly aligning across the board with a number of events that are taking place, and recent U.S. Starting to maybe become involved with the industry outside of the U.S. and also inside the U.S. And so that's certainly encouraging. So on production, we just mentioned, this project has a PFS stage, scenario of maybe some 29 million pounds per year when it is commissioned. In your opinion, how does this kind of supply, what do you think on impact that would have when this comes online? Do you see that at that point the demand would be so significant that this 29 million pounds would maybe not hurt the market, or would it just be such a huge demand situation that this would be a welcomed thing?
Yeah, I mean, we definitely believe that firmly. People like to just group supply all together, but the reality is supply from a given jurisdiction in uranium is especially important. And, if you look what has happened over the last 10 to 15 years in terms of the absolute dominance of Russian or FSU, former Soviet Union states, production levels as a percentage of global supply, because you've had the West, OECD nations that have historically been large producers and suppliers of nuclear fuel to global utilities. A lot of those mines are just getting old now. Time goes on and mines deplete, and the Kazakhs and Russians are really the only ones that have expanded that production. And so you have a situation today where if you're a utility sitting in the West, you're very heavily reliant on, Russia and Putin and the like for a critical energy source, which, is just something that I think is not very sustainable, and it's something that is not a comfortable position for utilities to be in. And so something like Arrow coming online with that volume is very, very necessary, and something that will have a place. There's no question about it. It's a disruptive asset. It is going to be the largest and lowest cost uranium mine on planet Earth. So it will displace material. There's no question about that, but we aren't interested in suboptimal market conditions. And so this will be optimized at the time of production. There's no question about that.
So between the PEA and the PFS, the mine life was reduced to 9 years while the production level was increased. With a project of this size and the potential for it to be generational, what is the benefit of speeding it up from both an investor standpoint and a local community development standpoint? Do you see the 9 years as something that's expandable to make it generational? Why the quick time and really high production? What's the thought behind that?
Well, so from PEA to PFS, all that happened was production profile stayed the same over the first 5 years, and then we just extended that production profile of the first 5 years to the first 9 years now, and then we lost 100 million pounds in the inferred category. I mean, we didn't lose it, but because of the technicality of going from a PEA to a PFS, PEA you can incorporate inferred resources, PFS you cannot. So it's really just related to that technicality of reporting standards in Canada under the National Instrument 43-101 guidelines. So this year in 2019, we're converting a lot of that inferred material into the indicated category, and then a lot of the indicated into the measured category, the highest confidence level. So we'll definitely be expanding that mine life as we go into the feasibility study, which will be out kind of this time next year. And really that production profile is completely dictated to us really by the deposit. It sounds like it's a big project, but it is from a volume, like a pounds perspective, but in terms of a tonnage perspective, it's a tiny mine. You're talking about 1,000 tons a day. The shafts are basically the smallest shafts you can build. And it's really just a complete result of the grade and the value in that rock, and the geometry of the deposit being completely vertical, being completely hosted in the basement rock where you don't have any ground condition issues, and then there's no surface water as well. So it's really optimized from an extraction point of view, and that's really what drives that what you're calling kind of high volume at the back end, but in the front end going into the mill, it's actually very low tonnage.
Okay, well, I appreciate the clarification on that, and I'm sure that there's lots of potential to expand the time there and keep.
Oh yeah,
keep
I mean we basically just stopped drilling. The deposit remains open in every direction. We just stopped drilling for more because we're sitting here with 350 million pounds of global resources, and so we need to. That is more than enough to justify a wildly economic and long-term project, and it's going to generate $1 billion in after-tax cash annually, Canadian. So once we're generating that type of cash flow, we'll have tons of rigs expanding the deposit and growing it out. We have no doubt that This will be a true generational asset.
So of the 29 million pounds per year, how does the company see supply going out in terms of filling long-term contracts? How will that 29 million do you see in your view? How will that kind of be allocated? Will that be all in long-term contracts, or will some of that be loaded into the spot markets? How do you guys see filling that?
Yeah, I mean, we definitely haven't finalized our strategy in terms of percentages and that sort of thing. We are, if we go under the traditional method, yeah, it'd be heavily weighted towards long-term contracts. 70, 65, 70 plus percent under that or higher. I think Cameco, the existing producer in Canada, I'm fairly certain that they do all of their material under long-term contract. There's obviously huge benefits to that versus pure spot exposure, but it completely depends on the cycle that you're in. The benefit we have, obviously, in terms of being able to have more spot exposure is just given the cost structure of the mine, having it be, $5 operating costs, less than $10 all-in sustaining costs, per pound. So it's able to work in any pricing environment. If you go back for the last 50 years on an inflation-adjusted basis. So it truly is low cost. And so while we haven't finalized what the exact mix looks like, it'll likely be weighted towards long-term contracts, but that will all depend on a lot of different things at the time.
So have there been any discussions about uranium offtake partners at this point, and when might the company have something definitive occurring on that front?
Yeah, for sure. We're definitely in discussions with a number of groups, and go to all the conferences and that sort of thing to present and speak to all the end users globally. Our position on that is because our view on how the market will develop over time, and the fact that, let's put it this way, we could sign a contract tomorrow, but there's contracts and there's actual contracts, and based on the fact that we don't have definitive timelines for when this would come out into production, given we still have to go through finalizing the permitting process, and that's really the delta. We don't know how long that will take, and I'm sure we'll get into that in a bit, but because we don't have exact time that we will be operating, while we could get a contract, there'd be a million outs in it, and it's not a real contract. The only way we're going to sign contracts is if they're tied to time of delivery, and they're real contracts. So we are obviously, having this type of volume, this type of scale from this jurisdiction. Everyone's aware of us. We've been in discussions with all of them, or most of them anyways, and there's huge buy-in for this project to come into production, but we're not interested in signing what I'll call kind of a fake contract. We're only going to be signing definitive ones, and those can only really come at the point in which we have more clarity around the permitting timeline, or definitive clarity, I guess I'll call it, around the permitting timeline, and thus delivery of first pounds out of Arrow.
Right. No, I think you made a good point, because we see contract signing for the sake of having a contract. We see there's even, if you can set it up right, you can even have someone just do a contract just to show you have a contract, and we've seen that in the industry, at least in my view, we have, and so it's kind of interesting that you mentioned that there's some folks just having a piece of paper to wave in their hand, somehow they think that that's beneficial.
Yeah.
But you mentioned timeline, Travis. Give us a walkthrough. Give us a timeline of the project from today, until potential commissioning and production. Can you kind of just walk us through kind of a major milestone step by step, along with kind of an each year to when we might see this sucker, get online?
Yeah, so we're currently working through a two-phase, large-scale, the largest in the company's history, drill program, which is, again, aimed at converting a lot of the existing indicated resources into the measured category, as well as converting more of the inferred into the indicated category to come up with a measured and indicated resource base to expand the existing mine life of the PFS in a final feasibility form, which will come out kind of Q1 2020. At the same time this year, we're working through all the final compilation documentation work for the environmental assessment and licensing process, and that obviously incorporates the Indigenous engagement activities which I'll speak to in a minute. But that's all ongoing with the plan of having everything with the regulators, having all the sufficient data, everything to back it up. I mean, it might sound like we're just some people say, oh, you're just starting the permitting process. Our view is, well, we have about 5.5 years of data now that's all incorporated into that. So it's a really robust data set that's going into the compilation of these regulatory documents. And so the government will effectively have everything they need to make a decision on this asset come mid-2020. So that'll be in the form of all the environmental impact statement, the licensing programs, the feasibility study, everything in their hands. How long it takes them to review that and give us our approvals and everything, that is an unknown time at this point. But when you go through the science of the project, there's basically two parts of the permitting process. There's kind of what I'll call the science, and then there's the community-based part. So I'll start on the science. The science part of it, we have massive head starts just given the fact that, well, if you start from surface, we don't have any surface water. We're in an area that's 155 kilometers away from the closest town. It's on dry land. It's a very benign environment that we've been monitoring now for a long time. So we're able to do effects modeling very accurately. And then when you start going down, the deposit itself starts from 100 meters below surface. It's held 100% in the competent basement rock. So that is like effectively a granite rock, for lack of a better term, but it's really, really competent. Low hydraulic conductivity, all that stuff, all the work that we've done to date in terms of metallurgical, geotechnical, hydrogeological work has all confirmed that, independently verified. And because it's in the basement rock, we're able to employ conventional mining. And then, again, being in the basement rock, you have very clean metallurgy. So we have effectively non-detect levels of selenium, antimony, arsenic, things like that, which really can cause headaches from a processing side, and thus a permitting side. So we don't have to deal with those. We don't have any underground water issues because, again, we're in the competent basement rock, so we don't deal with water inflow risks and the like. And then from a design perspective, and because it's in the competent basement rock, because of the margins that we're dealing with this project, we probably starting about 3 years ago, we came up with a design for 100% underground tailings management facility. And so underground tailings is obviously not unique in mining, but what is unique is the fact that this is going to be 100%. And that is due to the fact that what we're able to do is actually mine benign waste out of the underground, bring that to surface in the form of a clean waste rock pile. It's non-acid generating and everything. Keep that at surface and then pump a cement paste backfill solution into the purpose-built chambers and store all of the tailings underground. Most mines or mines that use paste backfill or underground tailings to one degree or another, they generally they don't do 100% of the tailings because it is costly to mine out, because effectively we're mining waste, like completely $0 value rock, and bringing it to surface, which is obviously a very costly exercise. It accounts for about 21% of our operating costs in the PFS. But even adding on that 21%, we're still sub $5 cash costs. So that is something that makes a lot of sense. And then obviously because of what's happened recently, the very unfortunate disasters in Brazil, and the people of Brazil have had to deal with, that topic is obviously very, very topical. But we've been going down that path for a while because it's the right way to do it. And when you add in, long-term monitoring and reclamation at the end of a mine, which a lot of people forget about, that is, we're basically doing that as we will be mining. So it's really advantageous. So from the science perspective, it really ticks a lot of the boxes from a permitting perspective. And then on the community side, the other part of the permitting process and kind of social license to operate side of it, that is an area which the company is focused on prior to drilling our first drill holes, is really getting to know the communities, these communities that are 155 kilometers plus away from the project, but we call them our neighbors, because they are our neighbors really, and really just getting to know the fabric of those communities, becoming part of the fabric of those communities, and finding areas in which we can facilitate opportunity and help. And we made a lot of progress over the last 5.5 years on that front, where we feed 1,100 school-age students breakfast every school day in the town of La Loche in northern Saskatchewan. There, 2/3 of those were going to school without breakfast prior to that. Partnered with the Breakfast Club of Canada in that initiative, so that's been fantastic. Seeing month over month over the last 2 years increases in attendance, increases in enrollment rates, decreases in violent incidents, so on. We've also implemented the summer student program and mentorship program, which is the largest in Northern Canada. We've seen 30 students come through the program over the last 2 years, 4 of which are on bursaries from Nexgen now at post-secondary institutions, and this year is going to be the largest year for summer students and mentors that we've had. So it's having a really generational and sustainable benefit to the community, because it's just creating that window of opportunity for these outstanding youth that want to make a better life to have an avenue to get exposure to different vocations and have the opportunity to go to the post-secondary. And now what we're seeing is, that started with grade 11s and 12s, and now what you're seeing is grade 9s and 10s really stepping up in the community, becoming positive members of society, becoming, not that they weren't before, but just really focusing on it even more, and really attending schools, buckling down at school so that they are able to get into our summer student program and ultimately get into university and then come back to the community and improve the community that they're so proud to be from. So really making a lot of sustainable difference there. Those are just a couple of the things we're doing. It's one of those things where it's you can, there's kind of 2 ways of doing it for companies. You can write checks and have photo ops, or you can go in and really dedicate your time and effort. And for us, we've chosen the latter. And the time and effort, when you add that in, that far outweighs any of the direct costs associated with any of these programs. So it's really excellent, and it's just expanding every year that we go forward. And so we have huge support from the local communities and our neighbors, which is fantastic.
Yeah, I think you hit on a few key points there. I think that community outreach, community development work with any project is really critical, and I appreciate you going through that and giving us the information. So on back to the other side. So you're pretty much of the opinion that the company will have a complete submittal for the government to review sometime in 2020 and complete 100% application ready to go at that time.
Correct. Yeah, mid-2020. That will all be in the government's hands. Basically, after that, like I said, to just kind of finish off, I guess, your question, then it's kind of an X period of time for them to review, which again, based on all those factors that I outlined before, shouldn't be too onerous, given the relative technical simplicity of this mine. I'm not suggesting that this is easy or a layup, but in terms of mining goes, it's on a relative basis, it is one of those. And then whatever that period of time is for them to review it, then we get our approvals to construct and build the mine, and then it's kind of a 2 to 3 year construction and commissioning phase after that.
Okay. Well, I think that gives us a good indicator on timing. So on the CapEx side, so we're looking at, I think if I have my information right, about 1.25 billion. What blend of financing do you see kind of playing out in regards to debt, offtake, equity?
Yeah, I mean, well, so you'll have offtakes to kind of backstop your debt, more or less. The debt, obviously, with the EBITDA margins and the cash flow generation of this project, can sustain a very substantial portion of debt. And so you're talking kind of 70+% debt. We do have a lot of byproducts. So we have gold, silver, we have saleable rare earth elements as well. So there's potential for streaming financing as well. There's also no royalties on the project at all to date. So it's completely royalty free, other than obviously the ones that go to the government once you're in production, but which are all incorporated in the costs of production. So there's opportunity to do royalty streams as well. And then, yeah, you could do some kind of forward sale of production. So that's kind of what we're looking at, that heavy debt load, because it can sustain it very easily. Streams, royalties, offtakes, making up the balance.
Okay. So on the debt side, just a little bit more, and on royalties, you mentioned that. So the debt, is there a potential is the company will be looking at some bonds that will be, listed in the markets? And also with the royalty side, will the company be, reaching out to some of the major natural resource royalty groups, like a Wheaton, a Royal, Franco-Nevada? Will they actually reach out and talk to these folks about potential royalty deals with some of these big players in the natural resource sector?
Yeah, so on the debt, I'm talking more, it's very, very unlikely that we would do, a junk bond deal or a high yield public debt deal. I'm talking more project finance debt. So that would be kind of specific to, traditional bank debt, or, the debt funds, of which there's a few large ones that are involved in the mining sector. And then with regards to royalty and streaming, yeah, I mean, obviously we would be speaking to, in the event that the board and management wants to go down the path of doing that, then yeah, we would obviously be speaking to the natural uranium or the natural royalty and streaming companies in natural resources, of which you named a few.
Okay, sounds great. Appreciate the details on that. So with a recent press release came out that was giving some information on some shaft pilot hole drill results. Can you kind of break that down in layman's term for us, for the audience, and how those results are impacting the project planning?
Yeah, so basically those are kind of just holes going down to target depths relative to shaft designs as they are planned. And really, those are just making sure that you're not intersecting any ground condition issues, any mineralization, or anything else that would make those areas suboptimal from a shaft location perspective. And all those holes came back with as excellent locations for potential shaft locations. So to a couple of things. One is our understanding of the structures that host the deposit itself and where they are, as well as where they are not. It also speaks to the ground conditions, which I spoke to before, where it is truly very, very competent rock. And so, in finding the right location, once you're outside of the structures that host Arrow, and you're in this benign, clean, competent base rock, anywhere there is ideal for shaft locations. So we've now identified areas that would be optimal for that.
Okay. On that subject, just a little bit, talking about kind of this where this deposit is and the geology around it. So from a mine development standpoint, kind of just give us a little bit of an overview of the geology of Arrow. Why is it superior in comparison to other major basin deposits? And are there some drawbacks to the Arrow deposit that, say, another deposit might have an advantage? Can you kind of compare and contrast for us, the deposit type and kind of why Arrow is superior in many ways?
Yeah, well, I mean, I wouldn't say I wouldn't use the word superior, but it's optimal in our view for sure, and it is differentiated in the sense that it is completely contained within the basement rock, and it starts from 100 meters below surface. So There are deposits where they are contained in the basement rock, but then if you're dealing with a lot of sandstone above it, like hundreds of meters of the Athabasca sandstone above it, you still deal with a lot of those ground condition issues for your shafts. Because really the ground condition issues come from the depth and the pressure that comes with the depth of that sandstone. So if you're kind of within 100 meters, obviously there's not a lot of pressure that can build on those. As you get down 400 or 500 meters plus, and the basement rock is there, which is impermeable. You have this really big pressure that comes into it when you try to start excavating cavities, and obviously all the water that's associated with the Athabasca sandstone, because it's very porous, can cause issues. Now, Cameco's proven to be very capable of managing those risks. Obviously, they do come with added challenges, but luckily for us, we just don't have to try to manage those or deal with those the way that Cameco has successfully to date. So that really is the differentiator for Arrow, is the fact that it is contained 100% within the basement rock, no surface water, and very clean metallurgy as a result. And then, again, even if you go to the next step in terms of geometry, you're getting in. I mean, it's completely ideal. You either want completely horizontal or you want completely vertical, and the vertical nature of this really lends itself to, and the fact that it's these structurally hosted shear zones, graphitic shear zones. It's really ideally situated for long hole stoping, which is kind of a conventional bulk underground mining method, and then transverse stopes in the high grade area, which again is a very conventional method of mining. So you don't have to get into too specific or unique mining methods. So that really is the differentiator. In terms of downsides to that, there isn't really any downsides associated with any of those things I outlined. From a technical perspective, and it will come across as obviously bias being with the company, but technically there's not a lot of issues with it. On a relative basis, again, there's always going to be things that are small issues here or there with mines. Nothing's perfect, but as far as mining goes, this one's really, we've been blessed by Mother Nature, that's for sure.
Right. Yeah, no, it's certainly interesting, the situation that's occurring there, and how it relates and compares to some others in the basin. So moving on to another subject, is the company entertaining offers for a potential buyout at this point, or is management really decided on taking the project all the way to become a producer?
Yeah, we go under every day we approach on the basis that we're taking this into production and we're going to reclimate the mine. I think you can see that in the fact, if we were trying to just really juice this up and make some documents and then go try to sell it to someone, I don't think we'd go down a path of underground tailings management, other things that have frankly added upfront costs and added costs to the operating costs, unless we were truly going down the path of and had the intention to, like I said, build, operate, and reclimate this project. So every single day we go into the basis of that. We know what the value is to us on any given day. So we view it very, very dispassionately, frankly. We kind of view it like we're at point A today here on the lower left of the chart, and we're moving up towards point B, which is in operation and fully ramped up. And any day we're just tracking along that line. And if an offer comes in that makes it so our trajectory changes to above point B, as we can do it ourselves, then we'll recommend that offer gets taken by shareholders. If in the event that it sets us off on a trajectory that in our view and the board's view is lower, well then we won't take that or we won't recommend that to shareholders. And given the investment by Li Ka-shing's group, CEF Holdings out of Hong Kong and Canada, which is a joint venture between Li Ka-shing and his Hong Kong Holdings, and then CIBC Bank here in Canada, that is they control about 19% of the company. Management and the board kind of controls another 10% of the company, and so with Li Ka-shing's CEF's investment came an investor rights agreement whereby the contractual voting obligations associated with those shares have been signed over to management and the board of Nexgen under an investor rights agreement. So effectively that means that a board-supported bid, CEF and their affiliates has to support that, vote in favor of that, regardless of their views on it. In the event that there's a hostile bid, so an unfriendly offer, they cannot tender into that bid unless the bid gets to 67% of the remaining. So when you take out Li Ka-shing or CEF's investment and management of the board, you're talking about getting to 67 of kind of 71%. So really you're talking about like effectively 95+% voting in favor of this hostile bid, which is, practically is impossible. And then they can't sell their shares into the market without A, our consent, and B, an evolving list that we provide them as to who they cannot sell to. And that list can change at any time and include any names of organizations, individuals, anything we want. So really those shares are locked up, which is huge, and then combined with the board management's ownership. So the good thing is now we are truly in, us and our shareholders are in control of our own destiny now. We don't have to worry about opportunistic bids and that sort of thing. So it's we're really positioned well to take this into production. That being said, we're not a group that just needs to prove to the world that we can build and operate a mine. At the end of the day, we know it begins and ends with the money and shareholder value, and that's something that we'll optimize. But the value of a producing company generating $1 billion in free cash flow, that immediately, like if we were in that position today, we're immediately jumped into a top 15 global mining company from where we are today. And so the value associated with that is enormous, especially relative to the market capitalization of the company today. We're not suggesting that we should be valued at that ultimate value today, but the value that we are valued at today clearly doesn't reflect that end, and that's related to people's uncertainty around permitting timelines and also the macro environment in terms of uranium. It's still not. People are still not firmly believing that the moves by Cameco and Kazakhstan and others in terms of cost-related issues and turning production off is going to balance the market in the midterm to long term.
Well, I appreciate you holding, and giving out some of that, information and key points on the kind of the structure and obviously the major shareholder there. And I think you're right. I think a number of people are gun shy across the board about the industry still at this point significantly. So, there's a cast of characters kind of circling the Athabasca Basin area looking for uranium or trying to advance their deposits into production. What are your thoughts? Do you have any thoughts on any of these companies outside of Nexgen or anything you'd like to mention about the Athabasca Basin and the popularity of it? Anything you'd like to mention on that front?
Yeah, in our view, it's the best place in the world to be looking for developing or producing uranium. The regime in Canada and Saskatchewan specifically is absolutely fantastic and the best place that any of us have ever worked in. So it's, in our view, it's absolutely the place to be, and it's the place that the world will want uranium from going forward, again, given that relatively new reliance on former Soviet Union or Russia controlled uranium. So yeah, I think there's lots of room for the companies that are developing resources, exploring for resources, uranium resources in the Athabasca Basin. So we're huge supporters of the basin and everyone involved in the basin.
So outside of the basin, are there any, outside of Canada, let's take it outside there, are there any uranium businesses or any jurisdictions that you find interesting at this point?
Yeah, I think Australia has some great resources and a great history of uranium mining and expertise down there. It's a fantastic market, and obviously OECD nation country, so it's you're talking about the same, from a jurisdictional perspective, you're talking about the same void being filled with production out of Australia. So to me, that would go hand in hand with the basin. Obviously, the basin has a completely different size and grade profile than Australia does, but it's a fantastic jurisdiction with some really good deposits and projects down there. The U.S. obviously has an opportunity with some support from the government potentially coming up to try to rebuild a bit of it, history in uranium mining, and so that'll be interesting to see how that comes and what kind of support they get from their government. But the U.S. is, again, if you just step back, they're still the largest consumer till China overtakes them in the near future, but they're still the largest consumer of uranium. And they produce, extremely low levels of uranium relative to their ownership or their requirements. So that's obviously a jurisdiction as well that makes a lot of sense to be exploring and developing uranium resources.
So in your mind, what do you think is the biggest hurdle at this point, Travis, for the uranium price to kind of start its push higher?
Well, I think it already has started its push higher. I think the supply that's come offline as a result of cost of production and the price relative to the price of production, or relative to the price in the market of uranium, both in the spot market and the contracting market, which frankly, the contracting market hasn't really existed in any meaningful way since Fukushima occurred in March of 2011. So you effectively take that off the table. So there's not really any contracting that's happened in that period of time. And then the spot market, has been there, but it's really been dominated by traders pushing paper around. And so there's kind of really been this disconnect. But I think you've seen now with McArthur River shutting down, with Kazakhstan reducing its production, and then obviously prior to both those occurring, there was a lot of production, or not a lot, but there was some production anyways that has come offline just because the resources have been depleted, and then over the next couple of years, you have a couple of really historically significant Western sources of supply coming offline via, obviously, Rossing's been sold to the Chinese. There's not much left in that deposit. And then, Ranger in Australia as well, which at one point was the largest Western world mine, or one of the most significant sources of uranium in the Western world, is only got a couple of years left on it, and then it's done. And so that's kind of the position that we're in today.
So Travis, tell us why investors should be taking a stake in where Nexgen is today. What would you say to potential investors considering the company?
Yeah, well, it's a true tier one disruptive. The disruptive nature of it, there's terms have been thrown out of strategic and tier one and everything. I think the best term is disruptive. It's the largest, lowest cost producing source of uranium, or will be. And when you can buy that at, $1 billion, call it Canadian market cap, you do that all day, because the ultimate value of this is not just what it's worth when it gets into production, so what it's worth for incumbent players to not get disruptive. It's very similar to, the tech industry or any of the other industries that are currently getting disrupted. You've seen entire, very significant historical businesses basically become defunct as a result of disruption, because those companies couldn't move fast enough to get up to speed and manage the change that was occurring. This is the exact same situation. It just happens to be in mining. And that value, frankly, is indeterminate, really, because you're talking about what it's worth for incumbent business to stay alive and keep producing indefinitely into the future. So there's a lot of avenues for a lot of value. And, you can buy a tier one asset right at the turn of the cycle. I can't see why you wouldn't want to do that.
So how can investors reach out to the company for more information?
Yeah, they can visit our website, www.nexgenenergy.ca, and there's contact information on there. My contact information is on there. So yeah, any of your listeners are more than welcome to reach out to the company, or if they're in Vancouver, pop by the office and say hello.
Okay. Well, Travis, we covered a lot of information. I really appreciate you coming on to talk to us about Nexgen and explaining the situation and the potential. We appreciate you coming on, and best of luck with Nexgen.
Hey, thanks very much. Really appreciate it, and look forward to speaking to you in the near term.